You are neither right nor wrong because the crowd disagrees with you. You are right because your data and reasoning are right. Legendary investor Benjamin Graham. And Mr. Graham is exactly right. It is your data and it is your reasoning. And that's what we employ every single day. We don't care what the crowd is doing. We care about price movement and what it shows us. We are trend followers. We follow established trends of price in the market and follow that to success and victory. Let's jump into these charts. Everything up for the day. Not a big up day, but we do see gold, bonds, and both our stock indexes up for the day. How's this week shaping up? Well, it is an up week as far as the Heiken Ashi candlestick goes. Quite a nice size candlestick. Still negative on the derivative oscillator, still negative on the price percent oscillator, still in a confirmed down move. We go from the weekly to the 2-day, and we see that again, price is right there at the 2-day trend line. We are in a confirmed up move. We redrew this trend line after it confirmed an up move. This is just the first day of the latest 2-day candle that will finish drawing on Friday. So we don't have a trade in the S&P 500 since the 2-day isn't a confirmed up move and the weekly isn't a confirmed down move. We'll wait to see how things sort out. Up just a little bit for the day, 0.41%. What are we seeing from the 4-hour chart? What can it tell us? It can tell us that stocks are just sliding sideways. What does that mean? Digesting up gains, getting ready for further up movement, or getting ready to hammer down? We know the long-term trend's still in a down move, so we'll just continue to watch, see what there is to see, and when the market allows us to know which direction it is moving in, we will follow that trend. It's that simple, my friends. It is that simple. It is that profound. Most people can't do this because they won't trust the charts and their charting knowledge. They won't be patient, but patience is rewarded very, very well, and knowledge. Let's keep moving through the charts. What do we see on the Qs? That's a NASDAQ 100. We see the price percent oscillators about flat, derivative oscillators flat. We see the weekly candle is up. It's a green up candle for the week. It's pushed through that weekly trend line, but still confirmed down. What's the 2-day chart? It is trying to cross over, going up. It hasn't happened yet. If it's an up day tomorrow, very likely will be a crossover on that 2-day chart, which would pull out the ability to be in a down move immediately. We'll wait and see what the charts show us. If it's a down day, likely that blue price percent oscillator will pull through the red signal line, and it won't be a crossover, but we'll see. We'll wait and see and let the charts lead us. I want to do what the charts tell me, not what I want to do. I want to go down. But again, we'll let the charts tell us. 4-hour chart, we can see up some in the morning, red spinning top in the afternoon. So lots of indecision. Again, a sideways slide underway. Price percent oscillators heading up just a little bit. Derivative oscillators continuing to lose momentum. That mean things are about to switch over, going down? Don't know. We'll wait and see. That's what we do. We wait and we see. Okay. Going back now to the weekly chart, heading to 20-year bonds up for the day. Oh, by the way, the Q's up for the day, 0.59%. Bonds up for the day, 0.34%. We see a weak week. After 2 strong up weeks, this week is a red open box, not a closed box strong down candle, but a red open box, meaning, again, weakness. Price percent oscillator still heading up. However, derivative oscillators gaining upward momentum on that weekly chart. 2-day chart. What is it showing us? Again, a sideways slide. The latest candle is trying to move up. It's a green up candle, a very, very small one, albeit. And we can see on the price percent oscillator, it's flat, just out and out flat. And again, first day of the latest 2-day candle, derivative oscillator losing downward momentum. Now again, remember, the derivative oscillator is a combination of a double-smoothed RSI, Relative Strength Index, and the MACD. So it, again, helps us see overbought and oversold conditions. And, again, we see things peeling off there. So, we'll let the charts, again, lead us. I know where I want things to go, but again, we'll just continue to watch and see what we see there. 2-day chart still in a confirmed up move, and the weekly chart too. Now, what's going on with the 2-day? Just not enough movement yet. I'm sorry, from the 2-day to the 4-hour, just not enough movement yet for it to rotate over going up. Hopefully, after all this sideways sliding is over, we'll see things break out. See how the Bollinger Bands have gotten tighter and tighter, showing you less and less volatility with this sideways slide. So we'll see. Again, ready for that 4-hour chart to cross over going up because the 2-day and the weekly are primed for more up moves. We'll see. Keep your eye on the prize. Be sure to look at that in the morning. Lastly, we go to gold. Gold up for the day 0.61%. And again, another green up candle hitting higher highs, both in the solid candle itself and in the wick on top. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. Gold's looking quite nice. 2-day chart. What do we see? Well, we see that there was a lot more up movement than we've hit yet on that prior 2-day candle for the 10th. That encompassed both Friday and Monday. Then we had, of course, a red spinning top, lots of indecision tending down, showing some real weakness there, representing Tuesday and Wednesday. And so far, this representing just Thursday, first day of this latest 2-day candle, just half of it, we do see the derivative oscillator heading up, price percent oscillator heading up, and a green up candle. So again, things are primed, hopefully, for more up movement. What about that 4-hour chart? Not crossed over yet. Again, keep your eye on the 4-hour chart on both TLT and gold to see if indeed we have crossovers and the ability to jump in. You might say, why is this happening? Well, you could look at stocks and say because they're trying to figure out which way they're going. Money typically flows into bonds and many times into gold because they're seen as more safe havens if the market's doing poorly. Well, the market's not figuring out which way it's going to go yet, and gold and bonds are sort of hanging. Not enough solid up movement, but it is pushing toward the upside on both of these. Meaning what? That there's still a lot of overhang of downward pressure on the market. So keep your powder dry. Pay close attention. We'll see what there is to see. We will act based upon our training, based upon our charts, based upon the trends. If you haven't purchased our book, please do so. We're in the 11th printing. I am traveling, and I'm slower to get the orders out. I will be back on Sunday. So we will see to it that everything does start heading out. We have down to our last few copies on the 10th printing, and those 11th printings are coming in either today or tomorrow, my staff told me. So we'll make sure we get those orders fulfilled. If you want a book, we've got an autographed copy waiting for you. All you got to do is follow the link in the show notes, and we'll get one to you, my friends. Also, we appreciate your Patreon support. Great stuff for the Patreon members, including specialized trainings, chart reviews just for you, and, of course, short chart training, long chart training, Bitcoin training, all sorts of good stuff, plus that monthly question and answer session live where you join us, and I attempt to answer all your questions in the time that we have allotted, and we typically have more than enough time. So thank you so much, my friends. God bless. All the best from the whole team here at Charting Wealth World Headquarters. Keep the faith, my friends. Keep the faith.